everybody, welcome back to another weekly market review for F45 Trading. This week we are discussing November 30th to December the 4th, I believe it is, Friday, December 4th. First week of December and the last week of 2020. Now, looking at the markets here, we've had the US dollar has been declining fairly steadily for the past week and a half or so. After making these lows here, we kind of based sideways for about 2 weeks, excuse me, and then finally last week we started to see some decline. And then just as the Monday candle opened up here, we saw them dive below this old low from the, what was this date? End of August, September 1, it looks like that one is. So we finally dove below that. And if we go to a weekly chart, we can kind of see it a little bit better. You can see that dive right below there. So this week here, I think, and again, I think my objective is going to remain the same. I'm still looking for price to come back down and retouch off of this consolidation level in here. Keep in mind, there could be a little sensitivity at this candle's high right there. You can see this candle there reacted at it, this candle there reacted at it, traded through it here. We came back down once and twice. I think we're going to dip down to that 90.87 level, or whatever the high of that candle is on your broker. Mine is about 90.87 or so, whatever it is on yours. You'll have to figure that out. But I believe the ultimate move is going to be lower. We're probably going to be finding ourselves down into this consolidated range here and probably banking off of the highs of this range in here towards the end of the month, or maybe even sooner, depending on how fast they want to move it. Keep in mind, market has been in stagnation since August, which represents this little block of trading right in here. And typically when you see expansion and consolidation, you see expansion, consolidation, expansion. This was an extended range of consolidation. You're going to see expansion again. I believe it's going to be to the downside. Now, whether or not we have enough fuel to get through this area in here, that'll remain to be seen, obviously. But if we do get through there, then my eyes will go back down to this price area in price next, which is low 80s. Could be the next target if we see a run below here. I'll mark that on the chart for now, and you should also, in case we start to lose the levels in here, then you'll know what your next target is. But I believe, pardon me, I believe the intended move for the rest of the month, at least anyway, is probably down into here. Now, if you look at sort of where we've come from thus far in November, we could start to see some real quick moving declining price. So this could just be a road bump on its way down to here. But we'll sort of see. It is starting to get into holiday trading now, of course, in December, as it usually does. A lot of markets, money going into the markets typically tends to, start to go into holiday mode, which means they don't do their typical investing. However, it has been a very muted past 4 months, as you can see from these candles, 1, 2, 3, 4, with the exception of obviously November, which has declined pretty significantly. But I think because of this election and everything else going on in the U.S., that they were in a holding pattern, and now I think the results are finally starting to come out, and we're probably going to see that further push lower. They'll probably get the green light. So at any rate, watch this level here. As I said, that's this 90.87, 90.88 level as the first target for the week. And that's just right down in here. We had the market open up for Monday. We dipped down, opened up gaps down, and now we've filled that gap, and we again ran that low. So this looking in here looks pretty well traded to. I wouldn't expect them to go too much higher. I think you should probably watch this area right in here. If the market comes back up and tries to trade back into the body of Thursday's open, which is right up into there, we could indicate that there could be a possible stop run here by them running this, by them running this low out here, and we could see a return higher. And if that does happen, then I would probably be looking at the very least as a target to start early on, right up into the 92.15s level. Basically, right in around the lows of these candles right here, these 3 candles right there, we could see a return back higher if this area gets run out. Now, it's not very far, in the grand scheme of things. It's not a lot of range in price, but just in case you're looking to say, well, we're seeing a breakdown in trend, and you see markets starts to trade, the US dollar starts to trade above this level, I think they could be seeking the 92.15 level as a potential upside target. Now, if we get above that, that's where you need to kind of watch out. I don't think it's likely, but if we do start trading above that, then I would suggest that they're probably going to try to run through this range in here. But I think the move is written in here, and I think we're probably going to continue to fall lower on the month. But I guess we'll wait and see. So basically, just watch these levels in here. Watch the open from last Thursday. Watch 92.15. If you start to see price jam up into that level there and see some resistance, it could be the catalyst for continue to move lower. If it sees some resistance at those levels, and then you can obviously try to excuse me, target the high 90s from there. EurUsd, it hit last week's target very nicely. I said to watch this high in here, and we ended up capturing that last Wednesday, and then Thursday traded above. Friday, it was a nice close right above both of those highs on Friday, and then Monday again we opened up and straight to the upside. So my target on the week for EurUsd is 120.10. Not too far away, about 60 pips from current location, but again, very similar. I'd expect a little bit of a retracement, hopefully, on euro, and then a possible move back up into the 120.10s level. So I'm watching for that. We're finally looking like we're breaking out of this stagnation rate in here and making that move to the upside like we're hoping for. Longer term trend, I think 120-160 is what we're probably going to eventually see, and that's not too far away. Again, we're a couple hundred pips away from that, but I believe it's not going to be a straight shot up there. They'll probably take a week or two to get it up there, but I think before the end of this year we'll be at 120-160, if not higher, to close off the year. Very similar to US dollar. If we start trading below, again, this is Thursday's range in here. If we start trading and getting back into this range in here, I'd be a little bit concerned that maybe this was, again, a potential stop run above these highs here, and they want to drag this thing lower. But I believe that the move is in, right? We had them come up, run out the stops here, and then shake off, and I believe that the price is they want to get the price higher. Now, again, we could come up in here and create a couple of double tops, or a couple of resistance bounces in here, where it may take 2 or 3 times to get up in there. But I think ultimately, again, before we close out the year, price will be probably up above the 121 levels for EurUsd. So nice little weekly range here from last week, consolidation to that nice run Wednesday, Thursday, Friday of last week. And again, as I say, we had price hit a high on Monday, and now we're rebalancing lower quite quickly. Watch this area in here. I think we could see a potential bounce at this 119.30 to 119.20 level on euro. So something kind of like that. So just keep an eye on that level there. Could be an area to note on your charts for a potential bounce. But again, if you see price go lower than this area in here, obviously, be a little concerned that they could have a deeper of a run lower. GbpUsd, this pair has been trading up nicely, but it hasn't been going straight up. We've seen a nice little rally, and then a big retracement, and then up and down, all the way up here. And price is really struggling to get higher. We have a couple of highs right here that you should note on your chart. Right there, if I can get a straight line. A couple of equal highs right there. I believe that'll be the target on the week. However, they're really struggling to get back up there. Even Monday, we're still trading on the inside of the range on Friday. So we could see lower prices. And you can look on this range in here. There is a possibility that we could trade all the way back down to these highs in here. So watch that. We almost did that on Friday. But there's a possibility that they could come down, sweep Friday's lows, and then possibly push higher. Now, I normally start the weekly review with the news events coming out for the week ahead. I'll let you do that on your own. Just keep note that NFP, U.S. dollar non-farm results are out on Friday. That typically gyrates price. There's a couple of FOMC and unemployment news drivers, and it's a pretty volatile week. And so if I were you, I would probably wrap up all my trading Monday, Tuesday, Wednesday of this week and be done, and then wait until next week. Could be some unfavorable price action. Anything can happen in NFP week. So as I say, we have I think, in my opinion, a clear run lower on US dollar, but because of all that news, price could jam up and wick all over the place in all sorts of directions, and you don't want to be too tight to the market in those cases, especially on NFP week. Get in, get out, and if you can capture these highs here, great. Same thing with GBP. I think ultimately we'll probably be trading higher above this old high here. But I think the first target is going to be these highs in at 133, about 13400. I think would be an easy rip above, and that's only, again, we're only 60 pips away from that, so it's not too far away on GBP. But you can see the range that it's been working here. This is just really, really ugly trading. Nothing to take part in. So if I were you, I would probably stay out of GBP. At least until all the Brexit hoopla is all finalized, which is coming up in about the next, I think it's 4 to 6 weeks. I don't remember what the official drop dead date, if it was the January 15th or the 1st. I'll have to double check on that one. Maybe somebody could leave that in the comments for me if you could. Just let me know what that drop dead date is. I'd appreciate that. Anyway, Euro GBP, and then after that, I would suggest, cable would probably be a pretty decent market to trade. But until then, again, like I say, you look at this price action here, just very, very wicky. Anybody going long, they're getting stopped out. And I think we all know price is going to eventually run higher, but they're just making it tough for anybody going long. Unless your stop is way down under here or way down under here, there's probably a lot of stop running in here and people getting taken offside to go long because of it. So just be careful in that market. Euro GBP had a nice little bounce off of here. We haven't seen any significant movement to the downside yet on this pair, except for this tiny little price action right there where it bumped below there and below those lows there. And then they shot straight back up after doing it and then fell right back into the range again. You can see an obvious overall price pattern to the downside, but they really are taking... Now, don't be surprised if they do this and shoot this thing higher, way above, running all of these stops in here, and then come back down and do something like that. Don't be surprised if that happens. They're manipulating euro and they're manipulating cable, and to do it, they have to take Euro GBP in all sorts of different directions, which is why you're seeing this movement in price here. So just be careful if you're gauging your patterns or your tradable setups off of euro and cable from Euro GBP. Okay. UsCad finally took out some old lows as well too, had a nice little decline. Same thing as US dollar. I think we have 127, high 127s run out here possibly for the week. It may not get down that far, but we've had a pretty significant decline, obviously, as you can see in here. Price tried to get higher in here, and in here, and has failed miserably every single time, and price finally has started to collapse. We're in a pretty tight range, though. The past 3 weeks of trading thus far, it's only about a 200 pip range, so I'm hoping UsCad starts to get some large ranges here pretty soon, but we'll have to wait and see what happens. Either way, I don't really like this market too much, so I wouldn't advise doing a whole lot with UsCad if you can prevent it. So just as an FYI, probably better markets to trade out there. But I do anticipate lower prices. I think we're probably going to get down to here. Maybe this week, but for sure this month, I think it's going to get down to this range in here. I think more than likely what could happen on UsCad, because it is NFP, we'll probably see them shoot above these highs in here. We're pretty close to it right now, and maybe possibly shoot up above these highs as well. So just watch for those areas. If we get some significant volatility in price, it could take UsCad up into those areas. So if it happens, don't be surprised. But I believe overall, we could see lower prices on the week. Aussie USD, we had a nice run. As I said last Sunday's review, I want to see price above these highs here. We got that very nicely right out of the gates. On Tuesday, we popped up above. And then Wednesday dipped back down. Thursday went nowhere. Friday had a nice run, same as Euro. And then now Monday, we took out the high from Friday, and we're trading softer on Aussie. I think ultimately we're going to be above this high here. It'd be great, very similar to Euro, if we could see a return lower, possibly under, bounce back off of these highs in here, and then see a price shot above, taking out this high. And you look at Aussie, I've identified an area above price up into here that I think could be a nice, handsome target on Aussie. So we'll see if we get that. But keep in mind, we've got a lot of lows under here that they could want to run back lower. So watch out for Aussie. And Aussie is one of those ones, I believe we have an interest rate decision on Aussie this week, if I'm not mistaken. Again, you guys will have to go in and do your own news research and news drivers this week. But just be careful on Aussie, because I think there's some notable news. Actually, on all the pairs, again, it's a pretty volatile week regarding news for a lot of the major foreign currency pairs out there. So just watch out for that. That's it for Forex. Real quickly, crude oil. We had price run higher on news of these vaccines coming in, all this corona vaccine virus, or COVID vaccine virus, I guess they're calling it. News coming out, and it's I think everybody's getting real hopeful in the energy markets. Now, energy markets typically this time of year are actually bottoming out. We saw a nice little run here south in late October, early November, and then since then, these markets have been rallying on that news. Now, I personally believe this is a false rally. We ran stops above here, and they're going to sink this market, but that's just me. Again, I'm kind of a pessimist on energy I'm a bearish outlook on energy at the moment. I don't trust it. I personally believe they're going to see a washout on this market before the end of the year, maybe early next year. But then after that, I think we'll see a decent rally. You got to look at demand globally. Again, real quick, I'm not going to get into this too deep, but global manufacturing is still off. Flights are still a fraction. Global flights and air travel is a fraction of what it was. Yes, we're still getting staples and supplies and everything, groceries and everything, and retail goods into the stores. But at the end of the day, again, all reduced capacity. I know where I live, they're actually limiting the purchase of several not basic items, but luxury items, I guess, or items that aren't deemed as as essential. In some provinces where I live, they're actually preventing people from buying those. So which means there's less demand, coming in from these companies that ship them, which means less cars and vehicles and trucks on the roads, which means less demand in fuel and et cetera, et cetera, et cetera. Now, I don't see this as being a strong market currently. I think we're probably going to see a wash lower. I'm not going to be suggesting any bullish activity, so just be very wary of crude oil. But we did make a very convincing run above the 43 levels in here to mid 40s. I'm going to watch this week and see what it does. That's all I got for crude oil. Unfortunately, I think it's going to go to the downside, but we'll wait and see. I could be wrong. And then we've got now finally gold. We have a nice breakdown on gold. As I mentioned, I was actually only looking for gold to run back into this level in here. We saw an initial run lower and then a possible attempt for it to run higher and then another wash lower. We hit a pretty significant level to the downside. Any of the longs that were in on this rally in here have all been taken out. And the next move to the downside, if they really want to get crazy on gold and the metal markets, is under there. I personally hope they don't get all the way down to there, but just keep in mind, if we start losing this low in here and start getting back into this consolidation range in here, then it's going to be a shot down below here, and then they could keep dragging gold and silver markets lower. On that note, look at silver. So this is the gold market, okay? So we've come down, run through all of these lows in here from June to July. Look at silver. Has failed to go lower so far. Again, here's those levels, June to July that I was just mentioning in gold, very similar levels in here. We're nowhere near it on silver. Now, they could be waiting and giving everybody false hope and saying, well, silver isn't dropping. This is the stronger of the market. It's all dogpiled, getting on some longs on this market, only for them to hammer everybody and then catch up with gold and then starts trading back down to these levels here. But just watch these two, because we definitely have a bit of a divergence between the market in gold and the silver market. You can clearly see silver is not wanting to, so far, make that lower low where gold has made that lower low. Okay, that was actually back here, excuse me. So just keep your eye on that. I find the divergence to be very, very interesting. Usually gold and silver are pretty much paired each other. And, you know, every move for the most part, one makes, the other typically makes, and we're clearly seeing the difference between that. So keep your eye on the metals market. There could be a possible move coming up in those markets. That's about everything I've got for you guys today. I appreciate your time, and sorry for the delay getting this out to you. I had a bit of a family event to go in on Sunday, and so I didn't get a chance to get to my usual evening review for the week ahead. So I apologize for all of those people who look forward to that, but we got it out to you better late than never. And good luck trading this week. And for all of my members, I will see you live this evening in the trading room. We'll talk to you then.